Tax Mchuzi. My name is Anan Priska, your host. I'm very excited to be with you once again. It's been a while. I think this is the first one since the new financial year. And the first one with me. We've had a bunch of others before. Today we're coming in strong, we're coming in hot. We have Isaac Jagenda from the Tax Education Unit section, right?
Section, yes.
Isaac, our tax expert, tax connoisseur, tax pundit.
Interesting.
Everything. Welcome to Tax Mchuzi.
Thank you so much, Priska. I'm very honored to be here once again.
Okay.
And I want to greet our taxpayers. Good morning to you all today. This is the 11th day of the financial year.
Okay.
Yes, we are talking about a financial year because this is July, and this is a time when we get to actually set off for a mountain of a task called revenue collection for the government. A role which we do together with our taxpayers, because to collect revenue you really need the taxpayer to be on board, to be knowledgeable about their tax obligations and to fulfill them. So what we have this time round is to make sure that our taxpayers know what they have to do, and through platforms like this, the webinar, it's something that we use to enlighten and empower the taxpayer to be able to self-serve. This financial year, government assigned us a target of close to 32 trillion shillings. Now, because of that, we first of all need to understand that this is a stretch, but also it's good that we know that we can actually do this.
Yes, we can.
With everyone on board, with every single stakeholder coming on board and paying every single penny that has to be paid. At URA, we believe that if everyone pays something, then no one has to pay too much. So today we are here to talk about a very important subject, which is the presumptive and the tips that we can give to our taxpayers to comply. So especially the small business taxpayers category. So it is something we are going to look into. We understand some of the challenges. We'll look at the nature of their businesses, and we'll really understand and be able to dissect the tax procedures and how they actually honor their obligations, because government has actually simplified that for them. So what we are going to look at here are the compliance tips for our taxpayers.
Okay, nice. And I'm excited because July is usually a planning month for URA and also for the taxpayer, because whatever happened last financial, the old is gone, we're in with the new. So how are you going to plan? How are you going to make sure that you're compliant this financial year? And this is the best way to start. You have a clean slate. It's just 11 days into the financial year. So, this webinar is definitely for you to plan, to see how do you pull this off, how do you be compliant. And like you said, at URA, we do this revenue mobilization thing together as a team. We have, I think on our logo, there is like 3 dots, right?
3 dots.
So it shows one is it represents the small taxpayers, the medium, and the large taxpayers. So everyone, all efforts matter in this journey.
Counts.
So now, what is a small business taxpayer in URA's books? What do you mean when you say small taxpayers or presumptive taxpayers? What do you mean by that?
Okay, thank you so much, Priska. There can be quite a number of definitions or the way we look at a small taxpayer.
Okay.
However, as URA, we are an institution of government that first of all has laws that we follow. Okay. So in the implementation of these laws, we try to define what each of these business segments mean. When we talk of a small business, in the URA sense, we mean a small business is one which has a turnover of between 10 million shillings and 150 million shillings per annum.
Per annum. Okay.
That's the first thing we need to know. So anyone who is doing business and your turnover means sales. Okay? Sales. And when I talk of sales, I'm talking about everyone who, for example, from the day you open your shop in the morning, your enterprise, be it a salon, be it any kind of business,
retail,
from the very first day of the financial year up to the end, when you add your daily sales for the 365 days, if they are between 10 million and 150 million, then you are categorized as a small business.
Okay.
Yes. So that is how we categorize them. And we are going to see what are there exceptions to that, who qualifies, and how do you actually know? How can you be able to break this down? Because when someone talks of 10 million and then 150 million, many of us, especially, you look like it looks like it's a big thing.
Yeah, like the gap is huge.
we will really see that this is money that actually people make. Okay. Yes, but it has been put at that for the financial year, for the entire year. Okay. So when you want to get the daily, you just divide by 365, and then you're able to see how much am I in this category. Then you can proceed under this category of small taxpayers.
Okay. So if I'm out there, I have my boutique, and you know, like rightly is said, I fall in this rate. Let's say 11 million. My turnover.
You have a boutique, you have a garage, you have a restaurant, you have a shop, a hardware. All those kind of businesses
that we see around, really. So if I have, my boutique and I am in this category, what taxes am I supposed to pay? Like, because now you have my attention. Okay, I'm there watching. I'm like, I fall in this category. What are those taxes? What obligations do I have to meet?
Okay, first and foremost, our dear taxpayers, when you have a business, URA has certain expectations that it has outlined that you have to do. The first one is, first of all, we expect you to register. Registration means you acquire a tax identification number.
All right.
So a tax identification number is a 10-digit number which is given to you by the authority, URA. And that number identifies you from all the other taxpayers that exist. So every person who is earning something as a business must have a tax identification number. That is step number one.
Okay.
Then step number two, you've gotten this tax identification number. You need to then go ahead and make sure you keep proper business records. Now, proper business records, here we are looking at, look at the business that you're doing, and then know on a daily, who are the people I deal with? How do I deal with them? If, for example, you're making sales, we expect you to record this sales somewhere. Okay. It could be a small exercise book. It could be a counter book. Yes, for beginners, okay? There are people who may not be tech savvy. They don't have maybe an electronic gadget in the shop or a computer. So it is also acceptable to write these records down. Okay? So you have a record of sales and you have a record of expenses. Whatever form of expense, you need to record it, and URA should have visibility into these. So record keeping is very important, and we shall look at some of the benefits. Then the next thing is now to file a return. Now, filing a return, this one is done, first of all, for small businesses, those that are between 10 to 150 million. I would like to make some clarity that when you're between 10 million and 150 million in sales, you need to, first of all, you're required to file a return.
Okay.
However, this return for small business has been simplified. It has been simplified. It's not the other Excel. It's not the other Excel form that we all know. It's also important to note that you choosing to go to the simplified return is a choice. You can actually choose
can
to
still
remain
choose to
on the
use
other
the
form
other.
if you're comfortable with it.
Okay.
We will see, because it also has advantages. Like, for example, you know very well, when we are looking at these presumptive rates, we are going to look at them, and they'll be projected on the screen. Okay, when we are looking at the presumptive rates, you will actually realize that under these rates, when you're paying, we don't provide for expenses. Okay. So you just pay your flat rate and you're done with it. Okay. But under the normal return, you can actually claim your business expenses. So looking at the return, the presumptive return, the process you have to go through combines the payment. So return filing and payment has been put together in the same process. Yes. Okay. So for a small business taxpayer, you file and at the same time you pay. Okay.
Okay. They go hand in hand.
Yes, you go hand in hand, and it is totally web based. You just go to the portal, put your TIN, tell us your turnover, and then tell us where you're operating from, and then you submit. Okay. And then you also have to select the financial year, the period for which you're paying. Okay. Yes. And then you submit. So when you submit, that acknowledgement you receive comes with two things. One, a return acknowledgement, but also it comes with a PRN. Okay.
Okay. Yes. 2 birds, 1 stone.
Yes. So you hit 2 birds with 1 stone. Okay. And we are going to see how that happens and how it plays out.
Yeah, for the more practical session. But for now, I think you'll take us through the presumptive tax rates. If our producer, Mr. Sentongo, could flash. Okay, it's already there.
So we have these rates, and they have been categorized accordingly. We have a table that shows the various categories and bands which someone has to follow to know how much tax they are supposed to pay. Okay. And up to until 2020, these rates were not broken down into whether you have records or without records. Okay. So in 2020, on 1st July, effective 1st July 2020, we had a revision and a change in these rates, and we introduced 2 columns where if one has business records, they will pay a different rate, but also if they don't have business records, they are going to pay a different rate, as we can see. Okay. And just to also let our taxpayers know, these rates were actually reduced. We had presumptive rates that you can see the maximum band there is 900,000. Before, we had rates that could go up to close to 1.5, 1.6 million. Okay? But you all know what happened in 2020. That is the time when we got COVID. Okay? So businesses got some shocks, and government, in its wisdom, had to sit down and see how to work around the tax regime and make it more favorable for taxpayers. So that's why we got this reduction in the rate. So fast forward, we have the first band. Gross turnover does not exceed 10 million shillings. There, whether you have records or not, you pay no tax. Okay? Yes, you pay no tax. And then where the gross turnover exceeds Uganda shillings 10 million but does not exceed 30 million. The first category is where you have records. You're going to pay 0.4% of the turnover in the excess of 10 million. Okay? So when they say 0.4% of the turnover in excess of 10 million, what do they mean? For example, if I have my salon, and in the salon, when I add up, I have an income of, say, 1 million per month. Now, 1 million per month, if that is the average for 12 months, it makes it 12. Yes. Okay? So 12 million, we are going to get 12 million and deduct the 10 million. Okay? So the balance is 2 million. Okay? Now, when they say 4% of annual turnover in excess of 10 million, so what is excess of 10 million? It is going to be 2 million. So you get 0.4% and you multiply by 2 million.
Okay, then you get
I think it should be around 8,000.
Yes, it's 8,000.
8,000 shillings. Now imagine paying 8,000
As
shillings
your
as
tax.
an annual tax.
Wow.
But you must have the business records and they must prove. You must really convince. Okay. Now,
Then
in the
how do I
event,
convince the taxman that these are my records? How do you gauge?
of course, we can see what is genuine,
And
we can also look at how you've organized and how you manage your business on a day-to-day. Yes, but that is the tax rate as it stands. Okay. Then for those who do not have business records, flat rate of 80,000. That one there is no negotiation.
No nothing. So
Yes.
it pays to keep your records.
It
It really
pays
pays like a lot.
Yes,
That's a huge
it actually
gap.
does. Yes. Then the next category is those taxpayers whose gross turnover exceeds 30 million but does not exceed 50 million shillings. Okay. So, for example, let me assume I have a restaurant. Okay. Now, in my restaurant, on a daily, on a monthly, I probably earn around 3 million shillings. And that is sales. I need to emphasize this is sales. Okay. So 3 million in sales monthly, a year that is 36 million. Okay. Now 36 million, you realize it falls in this category. It's between 30 and 50. Okay. So you're going to pay 80,000 plus 0.5% of annual turnover.
0.4%. 0.5.
5, yes, 0.5 of annual turnover in excess of 30.
Okay.
So you just get the 36, subtract 30 million, and then you'll get, that is 6. That's 6. Then the 6 is what you multiply by 0.5%.
Okay. Then you add the 80K.
Yes.
So that's 110,000.
Yes, 110,000.
Okay.
Okay.
Yeah.
Okay. 110.
Yes.
Then when we go to the other category, without business records, you will pay 200,000. No computation needed.
Nothing.
Okay.
Yeah.
So yours is a flat rate. Yes.
So you choose.
So, and then we have the third
band.
It's actually the fourth. Of course, the first one was nil.
Yeah.
So we go to the fourth band, where a taxpayer has a turnover between 50 million and 80.
Okay.
Supposing, for example, one who earns 6 million in sales, you have 6 million in sales per month. So meaning a year you have 72. So 72 falls in the bracket. Okay, we are looking at. Okay, so the 72, how would we compute tax if you don't have business records? So we are going to get the 180,000. First of all, that one is flat. Okay. Flat 180. Then we also add 0.6% of the excess. When we say excess, someone may not understand it, but what you just do, you just say the difference between what you've gotten in between that band and the 50. Okay. So 72 minus 50.
Just 22 million.
22. Then you multiply that by 0.6.
Okay.
Yes, 0.6%.
132,000 plus the 180,000.
Yeah.
Okay, which brings us to 312,000.
312,000 as compared to
400,000. You're still winning.
For someone, you're still winning. Keep records and win. Okay.
Yeah.
And then we have the last band, a taxpayer whose gross turnover exceeds 80 million but does not exceed 150. Okay. So it means a taxpayer who is in between there. So supposing I am a taxpayer whose sales are close to, say, 10 million a month, it means in a year that is 120 million. So I'm going to pay 360,000. Okay. And then I will add 0.7% of the difference between the 120 and the 80. Okay. And
the 80?
Yes.
Okay. Which is...
So we get the excess turnover above 80 million. It should be 40.
Okay.
So you just get your 40 and multiply by 0.7%.
Okay, that's 280 plus 360,000, which is 640,000.
Yes, 640,000 as compared to 900,000. Okay?
Okay.
Now, the next question is, what happens for those that are above 150? Yes, if you go above 150, we have to register you for a tax called value added tax.
Okay.
And then, of course, with VAT comes the obligation to go on a system called IFRS. So please.
Now you hang with the big boys.
Yes. So you begin hanging with the big boys.
Okay.
Yes.
And that's a story for another day.
Yes.
For now, that's the breakdown of that presumptive tax rates, and it's very fair because if I'm 10 million to 30, I pay a certain rate, and it's not all bundled up in one.
Yeah.
Okay. And
it actually conforms to the tax principle, the progressive principle, where someone pays tax according to how much they earn. Okay? Because a good tax should be made in such a way that you pay as you earn. As your incomes increase, so does the tax actually increase. Yes. So that's why you see, as we go higher in all those bands, you realize the tax increases. Yes. So for someone who earns lower, they'll pay a lower amount.
Okay. Very fair. Very fair of the taxman.
Yeah.
And so, like you say that this is a final tax. Like once I'm done with this, I am done with my my obligations for the year. It's like you're
done. You're not going to claim any deductions, and you'll not have anything else to claim after paying this. Yes.
Thank you, Trevor, for flashing that. I think we'll get into the practical bit of now how do I access the simplified tax return, and how do I go about that? Because people watching are probably like, okay, now now I know what I'm supposed to pay, but how do I do it? Because that's that's a whole different monkey, if you like. And to our tax experts watching at this point, feel free to send in your questions. Our tax expert is here. You probably will not get him again, so make sure you send in your questions so that we respond to them, and we enter the financial well equipped and more knowledgeable, because after all, knowledge is power. So what are the due dates for filing and meeting these obligations? Let's get into that.
For a small business, first of all, I'll talk about the general due dates for income tax, because small businesses, this tax we've looked at is income tax. And it follows the deadlines for income tax. Okay. Yes. And in income tax, we have what they call a provisional return, and we also have what they call a final return. Now, because this small business does not actually file these two returns, they do once, we expect that by 30th September, as an individual, you have already fulfilled your obligation. So you have the first 3 months of the year to put in your presumptive assessment and pay accordingly. Okay? Yes, because that is the deadline for the provisional return for individuals. So we expect that you, as an individual also doing a small business, you need to at least have complied within that period.
Okay. So by 30th September. So that means even like now I can do it.
Even
like
now.
You don't have to wait for deadline day.
Yes, you can make your projections and put in. Okay.
Yes. Okay. That's nice. And what happens if for I miss the deadline?
Okay, of course, if you miss the deadline, in this case, URA is going to come, and URA will come and enforce. We have an enforcement mechanism where we can come and then issue the assessment ourselves. Okay. And it is most likely that when we come to enforce, we'll use the industry average. Of course, as usual, we have those assessment methods where we look at the businesses in the area, and then we say, for example, how much do saloons earn in Chaliwajala here? So we compare your small saloon with another big saloon. Of course, you know what that means. It's likely that you're going to pay more tax. Okay. Yes. So we encourage taxpayers to always
be
follow
proactive
through the deadlines.
and so that to avoid any of that. Okay. So as taxpayers, put in that return. Make sure you file as early as can be to avoid any, enforcement measures and anything like that. And, search on the right side of the law. So Isaac, at this point, I think Trevor, you can flash. I don't know. Are we ready? Yes. So okay. You can walk our taxpayers through the return filing process.
Okay. Now, what you're seeing on the screen here is our web portal. Okay.
Yeah. And
the web portal, you can see, has been simplified. In this previous financial year 23-24, URA undertook a major digital transformation drive where we had some of our products revamped, like our web portal. It's been simplified, and you can see just from there, there is the menus are fewer and simple. Yeah. And when we scroll down, that is where we are going to find our option for the payment. Okay, Trevor, maybe you can scroll down. Okay, so you can see down there on the bottom tab, we have the options for making payments, get a TIN, file a return, IFRS, DTS. So if you want to make a payment as a small business taxpayer, you go to the first option there, make a payment, and you click on it. Okay. Now, when you click on it, on the side there's a menu bar. You can see there are options there: generate a payment slip, print a payment slip. There are many payment options. But for a small business, what we will require of you is to just go there to that blue colored message which reads, click here to register a payment. Okay, so you're going to click on that blue colored message. Okay, yes, so when you click on it, you get that screen. Okay, now on that screen we will see there is an option for select payment type. It's been automatically put there as DT. Customs payments are done through a SCUDA system. So for now, we are going to look at the domestic tax payment. DT stands for domestic tax. So we have the tax head under the payment type there. We have NTR. NTR is non-tax revenue. Okay, that's where you find fees for yes, all those others. Yes. Okay, then you have tax type, and then you have the other NTR. So for us, we concentrate on the tax type. Okay, so because the tax type is where we have our major tax heads: the income tax, the VAT, the excise, and all those others.
Yeah.
Okay, so we will go down, and then we put our TIN. Okay, we'll put our TIN, and then when we put the TIN, it brings the details. Now, period selection, you're paying for a current period, you just select period after July 2021. Okay, scroll down, basis of assessment, you just select return. Okay, because we are also filing a return. Okay. Okay, because we are also filing a return by putting in our presumptive assessment. So under tax head, when you click on tax head there, when you click on tax head, the option for tax head is on the left. It's just on the left.
It's one of the mandatory ones.
It's one of the mandatory ones. Is it coming?
Is it?
Does it need to refresh?
Okay. Click on it one more time.
You're going to select income tax small business. Yes. So under tax head, you select income tax small business. Now, when you select income tax small business, it will bring another screen. You enter the TIN, and then after entering the TIN, you're required to enter at least one of the two, either an email address or a mobile number. Okay, yeah. Just a safety measure to ensure that no one is doing anything else on your TIN. Okay, because it's so likely that if you're the owner of the TIN, you will at least know one of those two. Okay, yeah. Yes, so you put a TIN there, and then we see what happens. So we type our TIN. Okay, so when we put our TIN, and then we will go ahead and put an email address. Probably we could use a real TIN, and we see just to take them through and show what really happens. I read your TIN. Okay.
Yeah.
100 281 9087. Okay. Okay. So our viewers, please don't put this there because we are just doing a demo. Okay. Then you go to mobile number. Okay, just put a number.
Just a random number.
Okay. Now, after putting that there, you go to the assessment date. Okay. So you go to assessment date and you put the first date of the financial year, which is 1st July. Okay. So it is refusing to accept. Okay. So now what you've seen there, because we put a dummy number, it is not going to allow us to proceed. But if we put the exact number that is on the TIN, it will allow us to proceed there. Okay. Yes. So we will go ahead, put the number. Okay. And then we proceed down to the assessment date, put 1st July. And then when you put 1st July, it will take us to the very end of the financial year. Assessment date 2, it will appear there. Then it will bring another screen where we'll now put the amount of turnover for the year based on your computations as a taxpayer. Then you go ahead and you click submit. Okay. Now when you submit, you get a payment slip and a return acknowledgement at the same time. Yes.
So that payment slip, that PRN, that's what you use to make your payment.
Yes.
Okay.
So the PRN is what you use to make your payment. You can use a number of options. We have the option of mobile money on MTN. Okay. Then you can use the option of the bank. We have the payway system. Okay. Yes, and any other banking options that are available.
Okay.
Yes.
And I think also the USSD code, the *285# hash.
Yes. You guys, that one can also help you to complete the payment.
Okay. Yes. So many options. Like we are literally everywhere. There is no excuse. If you want to use Momo,
and there is a reason actually why government actually brought this. Because because if you're looking at a presumptive taxpayer, okay, for example, someone who is very far deep in the village, okay, they have a shop. They may not have access to maybe a banking hall, but they should be able to, for example, generate this payment, this presumptive payment on their phone. Now, this one you can do if you have a smartphone, just go and then you generate this payment and then you submit. Okay? And then you can actually make the payment in the comfort of your
wherever you are.
Yes, or wherever you are.
Okay. Well, there is no excuse.
Yeah.
Okay. So do all taxpayers who are, like you said, 10 million and between 10 million to 150, do all these taxpayers qualify for presumptive tax, or there are some exceptions to it?
Okay, now all taxpayers are if we are looking at taxpayers between 10 million and 150 million, not all of them qualify. According to the law, the income tax law, it has exempted certain categories, like people who are offering professional services, okay? People who are in the business of entertainment and public utilities, okay? So when we talk of professional services, how do we understand it? For example, Priska, if you are, for example, a media consultant, or you are a lawyer, or you are an architect, you are an engineer, okay? You're doing projects for people. However much your turnover may be in this category, the law has barred you from using this presumptive.
Why?
Yes, because we assume that if you're professional, you have gone to school, you have gone through some very many worlds of learning, okay? And a normal return filing process should not be hard for you. So, but yes, these categories have been specifically specified in the income tax laws. And for people who are in those professional categories, the lawyers, the architects, dentists, those ones, you just have to go and file the normal return. And then you also claim your business expenses accordingly. Okay. Right. Yes. So this presumptive regime is only for taxpayers who are particularly in the businesses we know, the normal businesses, the restaurants, the trading, sale, you get. So largely it benefits those who are doing these kind of businesses. Yes. Shops, salons, hardware. Yes. Yes. And especially for people who are conducting activities like this, and they are not doing any professional work, because you don't need to be a professional to actually cut hair.
That's true.
You don't need to be a professional to sell bread in a shop.
Okay. Fair enough. That makes sense.
Yeah.
And then you say that people in the entertainment services, let's say musicians, those are off.
Yes, they are also included in the exemptions.
In the exemption. And they have to file the normal return.
Yes, they have to file the normal return.
Okay. All right. Thank you. So as we work towards wrapping this up, we're wondering, do you have any special tips for our taxpayers? Like take this with you, keep this at the back of your mind as, they get the financial years kicks off.
Okay, among the tips we have for our taxpayers, first of all, we've mentioned most of them. One, you need to register for taxes to get a tax identification number. Secondly, keep proper business records. They help you to address some of the tax challenges that you may face, okay? Because then you can be able to justify your turnover and your expenses, just in case you choose to file a normal return. And then you also have the option of you need to ensure that you look out for URA services near you. Okay, you can reach our URA offices for help if you need assistance. Okay, and then you can also call our toll-free line 0800 117 000. You can use the various platforms to reach us. Then we expect you to stay updated of the laws and regulations. Every financial year, government makes amendments to the laws, okay? And for this financial year 24-25, we've also had some amendments to these tax laws. So what we require of you, the taxpayer, is to know, because you may wake up one day and probably the category of small business taxpayers has been changed, okay? It used to be up to 50 million. Okay, but then up to until about 7 years ago, 8 years ago, it was moved to up to 150 million. So you need to be updated. Okay. Yeah, you need to be updated and of any regulations and laws. And we usually communicate to our taxpayers through the media. We send email, we send messages, just in case URA has something news or something we need to communicate. We send our taxpayers these messages. Then we also advise that you conduct your business in a sustainable way. Always look out for business help. Okay, always make sure you choose the right providers. If it is providers of finance, service providers, work with service providers, for example, who are registered, because we want to create a culture of compliance in the country, okay? But also compliance that is linked to business growth, okay? Because if you don't manage your business well as a taxpayer, it means your business is going to struggle, and you will also not be able to pay taxes as and when they are due. So as URA, we want to milk from a cow that is actually producing. Okay. Yes. So it is very important that when you're doing your business, take note of the proper business practices. Keep records, seek adequate and finance and, you know, sources of finance that are appropriate to boost your business growth, okay, we can have another conversation around that the next time. But these are some of the lessons we get when we are having financial literacy, okay. Yes, proper business records are part of it, and also obedience to laws and regulations, okay. When we send you these deadlines, please honor them. We are laboring enough to make sure we educate our taxpayers on these deadlines.
Okay. Yes. Thank you so much, Isaac. And while you were sharing your tips, we got some questions coming in. Peter Miner from YouTube is asking, I understand that presumptive taxpayers do not pay provisional tax, and instead they're supposed to pay final by 31st December.
Yes. Now the provisional taxpayers only file and pay once, but we encourage you to make sure that the payment is done at least by 30th September. The earlier the better. Okay. Yes. So because it's done for that particular financial year, and when the year is done, you will not have an obligation to actually file a final return.
All right.
The other kind of taxpayer who files a normal return, they file a provisional within the 3 months if they're individual, 6 months if a company. Then at the end of the year, they file a final. Okay. So for a provisional, for a presumptive taxpayer, they do not need to file a final. They just do it once. Their provisional is their final, and it must be done within the course of the financial year. The earlier, the better. Yeah.
All right. Okay. Thank you for that clarity. And I think, Peter, you've taken note of that. We have Samantha Nancheza from LinkedIn. She says, this is very insightful. So for companies not earning above 150 million, why are we obligated to register for VAT to transact with large taxpayers?
Now, registration for VAT is, first of all, it comes with, there are certain prerequisites or conditions that you must fulfill, okay? Now, if you're obliged to register, the obligation to register with VAT, normally in the law says that you must meet a threshold of 150 million. However, there is also the option of voluntary registration, okay? Because most companies, the reason why most companies, the big companies, prefer to work with other companies that are VAT registered is because when they are purchasing these goods or services from them, they will be able to claim an input tax credit, okay? So that's why you're going to find that if you're to deal with some of these multinational companies, the big entities, they want you to actually register for VAT so that they can continue benefiting from from the output tax that comes with the price of your goods, from the input tax, sorry.
From the input VAT.
Yes.
All right. Okay, I think that's been answered, and that's clear for you, Samantha. Isaac, thank you so much for making the time to come onto the program and to educate our taxpayers. I feel like they are so much more knowledgeable, and they've learned quite a bit. And for our taxpayers, thank you for being tuned in. Thank you for watching, and thank you for sharing your questions. We welcome you for the next episode and the next episode so that we keep walking this journey of revenue mobilization together. Isaac, thank you for coming, and we hope to have you again.
Thank you. Thank you so much.
We hope you will become a regular very soon.
I will.
Okay, our taxpayers, thank you. I will see you next episode, and remember to always stop by URA to reach out through our toll-free, through our socials. We are here to support you, and we're here to walk this journey of developing Uganda together. Until next time, bye-bye.